If you're looking for information on how to profit from the upcoming market crash, you're definitely at the right place. Make sure to hit the subscribe button below.
$7 trillion, and let's drill down on this a bit. So these are the names in their weighting in the top 5 cars. So obviously a Japanese name, there's a big US name, there's a European name dollar, but in here is Porsche and Nissan, Tesla's in here, Harley Davidson's in here. So it's a broad aggregate. And take a look at the same setup here with the home construction. The key here is that this is home builders, and it's very skewed in weighting towards the top few. Compare that to the XHB, which we know has a broader aggregate in terms of it has things like Lowe's and Home Depot and so forth, and more equal weighted. But let's take all 91 stocks and plot them as though they were a single security, that $1.7 trillion. And what we know, 2 things. There's a clear break-in trend, and here's the line, and you can see it. And 2, this aggregate is literally straight down all year. The ITB's down 11.5%, the XHB 10.5%. The CARS ETF is down 2%. This is a stock market that's even up a little bit. That relative performance is atrocious. Let's look at it just to make this point. So if I were to draw a line from here over the past 3 years, yes, straight up, but no performance relative to the stock market, and then worse, now it's actually down absolute, and it's making new 6-year relative lows to the market. This is the consumer, and it's not good.
I think Carter's got to come over. No question. Carter, come on over. Ryan will bring the chair in.
Thank you,
Ryan, thank you. So what does this tell us about the overall rally? I mean, if we think about the consumer and think about 60% of the U.S. economy is consumer spending.
Sure. And
does this mean that, everything's terrible?
So there's 2 things. I mean, if you look at the sector itself, we know after tech leading, energy and consumer discretionary are tied about 6.5% up on the year. But remember, that's as constructed, market cap weighted. If you take the consumer discretionary sector and give it an equal weight so that the Amazon and Home Depot don't have the impact, it's actually down. There is no rally in consumer. It's a few names that have held the sector up. And we know that autos, housing are much more important than restaurant sales or things like that.
But I don't know how you measure the fact that the components of discretionary, you said it market weight versus equal weight, but also look at what people are spending their money on in tech. I mean, that is consumer discretionary as well. You can make a big argument that Apple sits in that group. You can also make an argument then back to the autos. I mean, the autos have underperformed for a year. So this isn't a new trend. In fact, I think we're still wrestling with this whole thing. GM's down 25% relative to the S&P since October of last year.
Right. But GM is also making probably 30-year relative lows to the market. I mean, basically, it's a bad investment, right? Ford is at all-time lows. These are cyclical names that can trade at P's of 4 or 8 or 12. It really doesn't matter. There's no growth, right? So you hold them for the dividend. Maybe they cut the dividend. I mean, yes, you can get them for a trade, maybe make some money, but no one is winning the game playing Ford long-term or General Motors. That's dead on arrival.
So, Carter, how do you think about, we were just talking about interest rates a little bit. Let's just talk about the 30-year mortgage because you're talking about housing. When you think about this last leg of the S&P 500 that really started the beginning of 2014 after the taper tantrum, we had the 30-year mortgage rate go from 450 down to 350. Now it's working its way back up to 450. How much do you think that was, how correlated are these sorts of things?
I mean, ultimately, infinitely correlated, right? The equity risk premium is driven by that. And also this. It really gets down to, has the market and valuations, is it all sort of propped up based on easy money policies? Are we really, frankly, I don't think the market can handle 350. I don't think it can handle 4.25. I mean, normalized interest rates, the stock market in principle is not able to handle that.
Carter, thank you.
Thanks.
Carter Braxton Worth, the Cornerstone.
Yeah.
Macro. Well,
Obviously,
always tremendous.
Took the air out of
man, boy.
What did you do today, or what do you think of Carter's analysis?
I love Carter's analysis. I mean, XHB, for example, he mentioned, I might as well mention it. Go back to July 2015, traded up to 37.5 and failed. Go to last year, that's where it exploded off of 37.5. What's the point? Looks like we're going to trade down there, test it. I think risk-reward in the XHB actually sets up decently on the long side against this 37.5.
If you would like to learn more about the price patterns, about the charts, about how to be profitable in trading stocks and options, visit marketcrash.money. Click right here, how to profit, and find out the 5 core fundamentals that helped me turn 12,000 to 466,000 in less than 7 hours trading options from my laptop. Discover the power of accelerations of trading options. Are you completely fed up with ordinary results? Then definitely visit marketcrash.money. Hit this big green button and take action now. Get the answers that you've been looking for. Specifically, in this 1.5 hour course video, not only did I explain and specifically give you details on how I turned 12K into 466 in a very short amount of time, but I reveal a ton of secrets, specifically which are the best stocks for trading options, the top 3 chart patterns for huge returns, the key to locking the huge gains, how to trade the reaction of the market to the news rather than news themselves. I help you discover the secret behind timing. Can you imagine if you could only trade on days where you have a 70-80% probability of getting your trades correct and avoid the days on whether the probability is entirely uncertain? And more secrets like discovering the difference between the trend and TRO and what it could mean to your trading results. Again, visit marketcrash.money, hit the big green button, and make your 2018 the most profitable year ever.